Financial technology services, or fintech, have been an essential part of the tech scene on the continent over the past few years. Now, the rise of fintechs has disrupted the traditional financial industry, and that disruption has helped. It has helped bridge the financial inclusion gap for millions of users across the continent. Fintech is also the sector that receives the most investment in the tech ecosystem. Africa currently has 7 fintech unicorns, that is, companies that are valued at $1 billion or more. Why are the financial services the #1 choice of investors? And how can fintechs further help bridge the financial inclusion divide? Tunji Andrews, the CEO of Awaba, joins me right now. Tunji, welcome to Business Edge once again. Thank you for joining me.
Thank you for having me. It's been a minute.
Yes, it has. We'll deal with that off air. All right. So in terms of the fintech space on the continent, it's been the most obvious winner when it comes to Africa's technological and financial advancement. And in 2021, we saw over 50% of all funds raised for startups in Africa went to fintech. So why is fintech so popular? Why is it the place we see the most eyeballs and we see the most funding?
Because generally it's the future. It's speaking about what finance is going to be in 10 years' time. So right now we know what finance and banking or financial services is. So we know that you have a bank account, you're able to get a credit card or a debit card, you're able to make transfers, pay bills, but the future is a lot bigger. The future is in open banking, it's in embedded finance, it's in everybody being able to have their own financial institution in their own pockets. So it is the promise of what fintech, promises the world that makes it enjoy a lot of patronage in terms of investors at this particular time. Because in the near future, what we're going to see is that every business will be able to operate what your traditional brick and mortar bank can do today. And that is what the promise fintech gives.
Did you mention return on investments there?
Absolutely. So you see, the upside is huge. The upside is huge because while the banks, I still believe that the traditional banks are bigger valued than the fintechs as of today, in terms of if you want to look at today's value of pound for pound. But when you want to look at the future growth potential, the fintech businesses have a lot more potential. The general context is that in the future, we're going to see that fintech businesses
Okay, I think we've lost our connection to Tunji there. We will see if we can get him back very quickly. Of course, the conversation with fintechs, there is a return on revenue conversation to be had. But beyond that, for the continent, it's that bridging of the financial inclusion gap. And even within this ecosystem, payments, which is, something that has lacked for many years, have the majority of the funding going to them. And if we use Nigeria as a simple example, mobile money and digital banks have 38% of the market. Lending has about 23% of the market. Savings, investments, and crowdfunding here in Nigeria has 15%, while business services have 13%, crypto 8%, and 3% goes on insurance. And that is how, in a way you might say, the cookie or the cake has been cut. And of course, payment processes are quite important for a number of systems on the continent. And we're going to see what happens with those in the near future. As Tunji has said, it is the future is here, but he also did stress that there still seems to be a place at this point in time, pound for pound, for the brick and mortar banks. And we know that financial inclusion has been an issue for many African countries. Targets have been set and targets have been missed. Unfortunately, COVID-19 has also pushed a number of countries back with their targets when it comes to financial inclusion. You can't forget that the unicorns are also there. The unicorns mean that there are more things to be done. More people want to hit the unicorn status when it comes to the ecosystem. So let's see if I can get a few more answers out of Tunji right now. Tunji, you're back with me, right?
Yes, I am. Sorry about that.
No problem. So in terms of, I want to quickly ask about payment processes, and we see that seems to be, particularly for Nigeria, the part that gets the majority of the money or the investment. Why are payment processes so important for the African continent?
Because it's the first infrastructure that is needed to do everything else. So today we see that some of our telcos in Nigeria are now going into mobile payments and the rest. That is because the first infrastructure that needed to be laid was the telecommunications infrastructure. And on top of that, everything else will be built. I spoke about the future of finance earlier, in terms of the fact that multiple businesses will be able to own their own financial service embedded inside their business portals. The thing that makes that able to function is the payment processing systems, where you are able to do any transactions to anybody within the jurisdiction that you are. So it is the first step. In the future, we will see money go to more things, and I think they're beginning to go in those directions gradually. But it needs to get payments done and sorted first of all, then it starts to go to other things.
So because it is a money conversation, but it's really a numbers conversation as well. So currently we have about, let's look at this, 600 fintech companies across the continent. And while that seems like a lot, it doesn't seem like a lot when you compare it to 1.5 billion Africans, the youngest youth population anywhere in the world. So when you look at the number of the fintechs versus the number of the audience or the number of those who might use their services, do you think Africa has too many fintechs, or they're not even sufficient for what the market really needs, what Africans will need from financial services in the future and even right now?
So the way we look at businesses, and everybody sees business from the perspective that the businesses that exist today, a lot of them would die and not be existing in, say, 10 years. We all know that how the social media space had people like MySpace, High Five and the rest, very dominant at a particular point. Today, they are non-existent. So the expectation is that a few of these businesses will die. And some of them will come in the future, which will die in another 10 years. I'm not trying to kill anybody, but it's just the reality of it. So the more we have, the chances we have success on the continent. So what we're hoping for is some emerging giants to become the pay stacks of Africa, to become the Visas, the MasterCards of Africa. And that is what we're basically looking for.
All right, Tunji, I need to get your thoughts on this before I let you go. What we're seeing is that some African governments are, in fact, playing catch up with how fast technology is changing things. Some seem to be open, while others seem to be using regulation in ways that appear to stifle the market or trying to keep, innovation from really coming out. So when it comes to regulation, what should African governments really be doing when it comes to this tech ecosystem?
So I look at it from the perspective of a government's job. The government's primary duty is to provide safety, security for its institutions. So when a regulator is putting in laws, the regulator is looking at the people and trying to protect them. I think it's a context of working together. So the regulator might be playing catch up, but the regulator has a primary duty, and that primary duty is to the country. And so it is the job of the fintech businesses themselves to show the regulator what is possible. And we continue to see that in multiple areas. And the regulators are always open to change, as long as the change is not going to disrupt the country in its safety measures. If it is going to create more advancement, if it's going to create more jobs, if it's going to create bigger GDP, there's no regulator that is going to be against it. So I feel the problem here a lot of the times is that fintech businesses really do not know how to, interact with the regulator in such a way that the regulator is also able to see a win-win relationship in terms of innovation and disruption. So going into the future, I expect more collaborations, but I also expect fintech businesses to be mature in how they approach the regulators.
All right, so we'll end the conversation there for today, but we do look forward to having you back. Tunji Andrews, CEO of Awaba, thank you so much for joining me. And as we keep things moving along, there's just one thing left on this Business Edge train for today, and that's NC4 to watch. It's coming up right now. And these are a few stories that we're tracking at this time. We start in Zimbabwe, where the Reserve Bank has auctioned foreign currency, which was not available early this year, triggering an allotment backlog. Now, companies have been at loggerheads with the central bank after it failed to allot the foreign currency with a backlog of about 10 weeks. This has left companies exposed and struggling to restock due to limited working capital. And still in Zimbabwe, the local currency is at risk of being shunned if runaway inflation isn't quelled. This warning comes from the country's largest business group, the Confederation of Zimbabwe Industries. Policy interventions implemented by authorities over the last 6 months to protect the Zim dollar and rein in inflation have so far failed. Annual inflation soared in June to 192%, a 13-month high. South African farmers may resort to planting fewer crops as persistent load shedding disrupts planting schedules, and spiraling fuel prices make it more expensive to undertake daily farming operations. This is according to Agri-SA Executive Director Christo van der Reed, who believes that the current challenges faced by the country's food producers could have serious repercussions not only for the sector but also for food security. And finally, African nations need $424 billion this year to help them cope with the devastation caused by the coronavirus pandemic. Dr. Akinwumi Adesina, president of the African Development Bank, says the COVID-19 plunged 30 million Africans into extreme poverty in 2022. Now, Russia's war on Ukraine has fueled inflation and left millions hungry. Surging prices along with slowing economic growth are also increasing indebtedness in the region. And that's our show today. Thank you to all of our guests who joined us to have these conversations where African business, the finance and economy are front and center right here on Business Edge. Don't forget to follow us on social media, download our mobile app, of course, subscribe to our YouTube channel and watch us on the platforms we are available. I'm Tolulokwe Adileru Balogun, 11 a.m. West African time. It's a date right here on News Central.